Hi, everyone. This is Jerry Miller from Idaho Department of Commerce. I just want to do a quick sound check here. So if somebody on the chat could, if you're hearing me, just give me a random character in the chat box. Great. So it looks like, people are hearing us and the audio and everything's in good order. So let's get started. First of all, thank you so much for joining us this afternoon. My name is Jerry Miller with the Idaho Department of Commerce. And welcome to our webinar on the CARES Act for Outfitters and Guides. Before I get started, I want to have a couple things I would like to make. First, I want to thank Erin Lieberman for helping organize this this webinar that we're going to hear this afternoon. Also, would like to thank all of you who are taking time out of your busy day to be with us. And so with that, let's get started. I have a couple housekeeping measures here to address. First of all, most of you on the line are in listen-only mode, and that's to cut down on the feedback and other interference that might come on the line during the presentations. If you have a question for one of our panelists this afternoon, please use the question or chat panel on your screen, and we'll do our best to get to those. Today's webinar will be recorded, and if there are any handouts, we'll make sure those handouts get distributed at the end of the webinar, or at least within a day or two after the webinar. So before turning it over to our first panelist, I want to put in a shameless plug here for the Idaho Department of Commerce page. We set up a COVID-19 site on our web page, and here you'll find all the latest information about the various assistance programs that are out there, as well as some other the latest information from the governor's office and some of our other, and links to our other resource players and partners and stakeholders that are out there. I want to show you this slide to give you an enormity of the situation that we are looking at. In Idaho, there are almost 163,000 businesses that meet SBA's definition of small business. So you take that number times 50 times another 50, and that's the number of businesses across this country that are trying to access all these programs here at the same time. So with that, I just want to just encourage everybody, as you're contacting your bankers, the SBA, the Idaho Department of Labor, and other partners for assistance during this time, please be patient with them. This is an unprecedented event that we've never seen here before in this country, with everybody looking for assistance at the very same time. And if we just all bunker down together, be patient with each other, stay tuned to both local media and social media for the latest updates and happenings, we all should get through this in good order. So that's it that I have for my introductory remarks. First up, I'm going to introduce Christian Pennington. Christian's a lender relations specialist with the Boise District Office of the Small Business Administration. And so let's see if this unmuting will work. Christian, I've just unmuted you. Can you hear us? Can we hear you?
I can hear you. Can you hear me?
I can hear you. Looks like we are good to go.
All righty. Well, I don't have any slides to share with everyone, but I figured what I would just talk about are the programs we have in place right now uh, in response to COVID-19. There's two primarily programs, um, and then once I'm done kind of introducing them, then I'll open it up for questions. So the one that everyone is in the news you're hearing about is the payroll protection. I'm sorry, the Paycheck Protection Program. That is a loan, and it will be from credit unions or banks to the small business owner. And what is different about this loan than our normal 7A loans that we do is there is a principal interest forgiveness built into this for the payroll plus rent plus utilities or mortgage interest um, for up to basically take 1 month of payroll, multiply it by 2.5, so basically 2.5 months of forgiveness that's eligible. Your point of contact for these loans would not be through us directly. It would be through your local bank credit union. I can tell you that almost all the banks that I deal with in the Treasure Valley and throughout the state, actually, Idaho Falls, Twin Falls, they're all pretty much are taking PPP. Um, there was a blip there. Well, Wells Fargo was not because they hit their lending limit. But this morning I read that the FDIC is raising their lender limit. Whether or not they take new PPP loans, I don't know. You'd have to contact your banker. But oh, here's a slide. Yeah, this is perfect. This has got everything on it that we need. So the interest rate on the PPP is 1%. The payback period is over 2 years. It, like I said, it's got the features in there for forgiveness. The payments are deferred for the first 6 months, and I can tell you, we basically rolled this program out last Friday, is the first day that you could, drop off applications. Yesterday I checked, we had a couple thousand already in the pipeline. And I really expect those dollars being dispersed and get out in the community soon. So that's the payroll protection program. Any SBA approved lender can do those. And what I'm telling everyone to do is to start with whatever bank you have a current relationship with, your current banking accounts, get in touch with them, see if they're participating, and then go from there. There is a lender list on our website. If you just Google Boise District Office SBA, there's 2 different resources on there that has all our lenders on it. There's the resource guide. It's a PDF you can download. Basically has everything that SBA does, from contracting to counseling to finance. But the specific list that has all the banks on it, I want to say is on page 30 or 31 of the PDF. Or you can scroll down the bottom of our webpage, and there's a link that has a lender list on it. And I can share that after this is over. So that's the payroll protection program. That's one program we have. Another one we have is the economic injury disaster loan that goes up to $2 million. The term is 30 years. The interest rate is 3.75% for businesses, 2.75% for nonprofits. Eligible expenses is basically a working capital loan. So any business expense, as long as it's not for private, you're not, paying your mortgage on your private home, it will be eligible. The forgivability is up to $10,000, is an advance. And where to apply, you would apply directly through our website. So you would it's on our website. The easiest way to find it, though, is just put it in the Google search bar, economic injury disaster loan, and it'll come directly to it. Or also, if you go to our webpage, there's a banner at the top that says, COVID-19 It's in red and yellow. You click on it, and it'll take you directly to the web page where you'd apply. There is another program that's coming down the pike that's not on here that I want to bring up just because I think it's important, particularly for people that already have financing through SBA. You might have a 7A loan out there. They're going to be doing payroll, not payroll. Basically, the SBA is going to be paying that going forward for a couple of months. I don't have any of the SOPs on that yet. And it's on our website if you want to read about it. It's SBA debt relief, but I can't really speak a whole lot to it because I haven't seen any rules on it yet. They're still being promulgated. But those are the two different programs you have. As far as turnaround, I truly expect the PPP. It's been kind of a bumpy week trying to get this implemented. But once it's up and going, I really expect that to be the quickest way for turnaround of funds. The economic injury disaster loan has got a longer payback period. It doesn't have the forgiveness amounts for the same amount, obviously payroll and rent. And I think it might, I don't know how long it'll take for it to do the turnaround on that. But you can have both of them as long as they're not for the same expenses. So you could have the PPP cover your payroll, and the economic injury disaster loan can cover other expenses as long as it doesn't cover payroll. And that's a question I get asked a lot, and that's the answer for it. So a federal agency, we can't duplicate benefits, so you can't have loans for the same purpose. But if it's for different purposes, you can have them both. And with that, unless we have another slide, I'll open up to any questions. Just raise up your hand.
Yeah. Thank you, Kristen. We already have a couple questions here in the chat.
Okay.
So one of the things about the outfitter and guides industry is that May, June, they're just basically wrapping up. Their bulk of payroll and employee employment is in June, July, and August. So a question we have here on the panel is, will SBA, or is there talk of reconsidering the payroll protection program, business payroll calculation? And the reason for that is that most of those payroll expenses for outfitters and guides will hit in July and August versus May and June.
Right.
Or if you could speak to that.
Yeah, I've heard that question from other seasonal businesses. I honestly don't have any guidance on that specifically because it doesn't speak to it in the SOPs about seasonal businesses. I know the Idaho loan, they ask you for, at least they did ask you for, basically a year's worth of monthly, what your expenses are and income, and then they would take that to figure out what your what the amount of loan you would be eligible for. For the PPP, I would still say apply for it. Go and talk to your local bank and kind of go from there. But I don't have a good answer for you, honestly, because I haven't seen anything that deals specifically with seasonal businesses. The only guidance I have is you have to have been a business that was, in business before February 15th. So you couldn't, no startups, nothing that's, hey, I want to take advantage of this, so I'm going to start a new business. Which that wouldn't apply in a seasonal business because, of course, you're already in business. You just weren't running anything during the winter and the spring. So my advice to you would be to apply to it, get a conversation with your local bank. I can't give any recommendations on banks, but that would be my first. That's my recommendation to you. Any other questions?
So yeah, another question, and this kind of relates to the idea of or the issue of finding a banker. And I'll just kind of summarize these here together. One question is, my bank doesn't do SBA loans, so where should I go? And I think you kind of answered that in your question. But another question here, I went to an SBA lender, and they told me that they were only taking customers with a pre-existing business relationship with the bank. So are there any other tips or advice you could give for businesses that are hunting for a lender?
Yeah. So I have heard that some banks are only taking clients they have current relationships with. A couple of large banks, I don't need to mention them, but what I would recommend that they do, and actually this is a pretty good idea, just go on LinkedIn. So believe it or not, I kind of keep LinkedIn on because I'm connected with a bunch of bankers, obviously because of my business. And so they're forever posting what businesses, what banks are taking PPP loans, even in your area. So that I think that would be a good way to start. Another good way to start, I think, honestly, we just go to the lender list I mentioned on our website. It's up. I made sure it has all the current banks that are taking can do 7A. I reviewed that Monday to make sure that's current. So all the banks on there can do 7A loans. That's probably my recommendation is go use that lender list, look at them. If your current bank that you currently bank with is not doing it, but I can't give you any recommendations on which lenders to talk to, but I can tell you what banks historically have done lots of SBA deals. So Zions historically has done lots of SBA deals in our area. DL Evans historically has done lots of SBA deals. Other local lenders, Idaho First is really getting into it. So is Bank of Idaho. I don't know what part of the state you're in, but if you're out in the eastern part of the state, I know Bank of Commerce is doing PPP. They're pretty much almost all of the banks are that I'm aware of, and even some of the credit unions in Boise. I know CapEd is taking applications, and so are ICCU. So yeah, that's probably enough for him to find a lender. At least I hope so.
And for those that are on the call from, say, maybe the Panhandle and North Central Idaho, would they need then to refer to the list on the Spokane area SBA website?
Yep. Yeah. Yes. Absolutely, because they're in a different district than we are, and I don't know those banks as intimately as I do the ones in Eastern Oregon and Southern Idaho, because that's who I cover. But for those folks up there, if you just go to the Spokane branch, they should have a lender list for you as well. Also, if you just click in the, I know for a fact they'll have the resource guide, and if you click on because every district office has that, and you'll be able to find banks there.
Okay, and we'll make sure we get those links out to everybody after this webinar.
Okay.
Another question about payroll protection program. What constitutes an eligible payroll expense under that program? Is it just salary and wages, or do things like benefits and employer share of taxes and costs apply as well?
Yep. It is salary plus benefits. They actually put out an FAQ on this last night, and I can share that with you if you want to share it out. But it kind of goes into detail. The only thing that I can remember that doesn't cover is the business owner's portion of the payroll taxes.
Mm-hmm.
So, but you don't figure that in the calculation. Pretty much everything else does.
Great. So we have a couple questions here about the Economic Injury Disaster Loan Program, and I can tell you this is a question that I've been getting frequently over the last 3 or 4 days, and that is there a way for us to track the progress of our Economic Injury Disaster Loan application status? And then another questioner here applied on March 31st and has yet to hear anything or receive an email indicating that the application was accepted or is in process. They have an application number, but haven't found a place where they can go and plug that number in and see where the status of their loan.
I wish I had a better answer for everybody, but there's a 1-800 number you can call to talk to them about it. But there's also an email you can disaster customer service at sba.gov, and that's all one word, a lowercase. You can send an email to them asking about it. But that's the only information I have for you. It's it's a little technical, but they're through the Office of Disaster Assistance, and it's a completely different sub-department from the traditional commercial lending side. And I can't go in and check on individual loans like I can the traditional 7A loans. It's one thing I will say is that the Idaho loan's been around forever. It's not specific for this disaster. It's the same program that we've used for fires, hurricanes, tornadoes, and like Jerry mentioned earlier, it was designed for a localized disaster, and we've never seen anything this big before. And so they've got a whole lot of people trying to check on their status and all at the same time. And I know they're probably as swamped as I am here in the local office. So I would just recommend be patient, but I don't have anything besides a 1-800 number you can call. And I can make sure that Jerry has that at the end of the webinar.
Okay, another question here regarding payroll protection program. Does workers' compensation insurance premiums cover, or are they covered by the PPP?
I don't know. I'll look at the SOP to look exactly, because the last time I looked, the only thing that I remember was excluded specifically was the employer portion of payroll taxes. But I'll look at those FAQs to double check. But I don't remember it specifically being excluded.
Okay. And I see a couple questions here on the chat regarding unemployment. I'm going to put those in the parking lot for right now, because our next speaker from Idaho Department of Labor will be addressing those issues here in a few moments. I have one last question for you, Christian, before we turn it over to Josh. And that is if you could speak to the percentages of your payroll protection program loan that need to be spent on payroll expenses versus the amount that can be spent on other qualified expenses like rent, utilities, etc.
75% of the PPP has to be spent. Well, let me put it this: 75% of the forgivable portion of the PPP has to be spent on payroll. So if it's a loan for $100,000, just to use that number, 75,000 of it would have to go towards your payroll expenses. 25% can go towards rent or mortgage interest. One thing, if you have a business that has lots of, not that high a payroll, but maybe you've got lots of rent or mortgage expenses, maybe think segregating 2 different loans. Can't give you advice, but that seems like a reasonable strategy to me.
So just so we're all clear on this. So for example, let's say I receive a PPP loan for $100,000.
Okay.
I spend $70,000 of that loan amount on payroll, qualified payroll expenses. I spend $30,000 of that on rent. When all is said and done,
what would happen is
95% of that, or $95,000 of that loan, or 95% would be forgivable, and then I would have to pay back at a 1% interest rate over the course of the next 2 years the $5,000.
That is 100% correct. Yes. Essentially,
Awesome.
you just reduce the amount that is forgivable in that situation from 100,000 to 95.
Well, great. Well, thank you so much, Christian. If you just hang on the line here in case we have more questions after our next speaker, that would be great.
I will. I'm here.
And I'm going to put you back into mute mode and go over for our next speaker here, and I'm trying to get you up. So Josh, can you hear us?
I can hear you. Can you hear me?
And we can hear you. Great.
Great. So my name is Josh. I'm with the Idaho Department of Labor, and we administer the unemployment insurance program. And so typically we see individuals who become unemployed, possibly employees that you have working for you, and they file claims, and they receive unemployment insurance benefits during the time that they're not working. But we also have a new program that's just been implemented within the last probably 3 or 4 weeks, having to do with individuals who are self-employed and who are not working as a result. We call that the Pandemic Unemployment Assistance Program. And so, like I said, these have to do with individuals who are typically self-employed or are not working full-time. They don't have enough wage history to be eligible for benefits. And so because they're not eligible for regular unemployment, they're typically not meeting the basic requirements that we have with the wage and earnings. They can be eligible for unemployment insurance benefits if they are impacted as a result, or they're not able to operate their business due to reasons connected with COVID-19. And some of those reasons include being diagnosed with COVID-19 or having symptoms, someone in their house they have to care for, somebody who may have to care for their minor children due to the fact that that the schools are no longer currently operating. Individuals who are impacted due to a quarantine, they can't get to their job because they're advised by their healthcare provider to quarantine. An individual who was going to begin employment but is not able to because as a result of COVID-19, they become the breadwinner in their household because the head of the household has passed away as a direct result. The individual has to quit their employment or their business is closed as a direct result of the COVID-19 public health emergency. So we can make those individuals eligible, and what we do is we look at their earnings and we would potentially qualify them for benefits. This isn't a program that the Idaho Department of Labor has utilized before, so it is taking some resources for us to implement it. We're looking at people receiving payments in about 4 to 5 weeks, but the good thing is we are able to backdate this, and we're actually able to backdate it all the way till the beginning of February, effective February 3rd. We could potentially pay somebody going back that far if they were impacted as a result and they don't meet our regular eligibility criteria for unemployment. The other thing with this program, and this is similar to what workers are seeing, is we're also going to be able to pay these people an additional amount on top of what they would receive. So typically somebody would receive anywhere from $168 to $448 on unemployment. But with this program and the current program we're dealing with our regular customers, we're able to add a total of $600 onto the top of that program. So an individual could receive up anywhere from about $768 to about $1,048 in unemployment. And like I said, it's just a slightly different program than the one we currently operate, but it is available to those individuals who are not typically eligible for unemployment insurance. Those individuals that are self-employed, we're looking at and situations where individuals who are corporate officers who may not have been eligible for unemployment insurance, those individuals may be eligible. And what we're telling folks right now really is to at least apply for the program. You can do that on our website at labor.idaho.gov, and you just simply file a claim. Each week that you're unemployed, you would just simply answer a series of questions, and conceivably, if you're found eligible for this program, then we'd be able to pay you unemployment going back to really when you were impacted by COVID-19. If that's currently, then be effective this week. If it goes back prior, it may be going back to several weeks prior. So the main thing we're telling folks is to at least get the claim filed. And again, that website is labor.idaho.gov. We also have some FAQs on that website that we're continuing to update, continuing to put new information out there. And then the next step is those folks file their weekly certifications, and that's really what tells us that that person's still unemployed due to COVID-19, and that tells us to make payment to them. We're experiencing, I think similar to the previous speaker, a really high volume of work right now, so we'll absolutely get to individuals, we'll get them helped. But right now with our high workload, it may be delayed, but at least it is going to eventually come to those individuals who are eligible. And like I said, we're probably about 4 to 5 weeks out from that. So that's that program that's available, and I'd be happy to answer any questions that individuals might have.
Thank you, Josh. We did have a couple of questions that were in the panel from our last speaker that were employment related, and I'm fumbling through here trying to find those as we speak. Hard. So while I'm pulling up those questions, Josh, I know one question that comes up quite a bit is what is the best way for folks to access, to submit an application to labor for unemployment benefits?
And that's just simply done on our website at labor.idaho.gov. We have what we call our claimant portal. So if you really just want to go right there to file a claim, you can type in labor.idaho.gov/claimant portal. It requires setting up a user account and a password, and then a verification process. And once you do that, then it's just simply filing a claim online. For those individuals who maybe don't have access to a computer, we can take the claim over the phone. The only thing I kind of caution you with right now is our wait time is fairly significant to get through on the phones. But once you get through on the phone, we're able to take your claim probably within a day after that. We kind of have an individual call you back and gather all the information. But you can file it online. You can use your phone. You can use your tablet. But most of our claims are filed online. If you're able to do that, great. If you're not, then call us and we would take your claim over the phone.
And is there a better time of day to try to access those web resources than other times of the day?
What we kind of see is that typically you can file the claim online at our website any time of day, 24 hours a day, 7 days a week. If you're trying to get through on the phones, we do tend to see larger wait times and more people calling in because during our lunch hour or during kind of that 11 to 1:30 time when some of our folks are taking their lunch. But right now, I would say that we're probably extremely busy anytime you call. And so we usually tell people we see lesser wait times if you're trying to talk to somebody on Thursdays. That's kind of our lower volume day, but right now all of our days are very similar. We're just extremely busy. So I would just ask, I think like you mentioned earlier, Jerry, just to be patient. We'll get to you. But it's just a matter of trying to serve as many people as possible. And we have the limited staff to do that, but we're taking every step to make sure we serve all of the people that might be eligible for our programs.
So we have a question here regarding unemployment insurance risks. And basically the question is, for those companies that are laying off employees due to COVID-19, will that impact their unemployment insurance tax going into the future?
Yeah, that's a good point. That's a good question. So what the governor did with an executive order back I think effective for any claims filed after March 15th or later, is we will not be charging those employers for their portion of the unemployment claim. Typically what will happen is we would charge an employer if they lay somebody off due to a lack of work, due to slow sales, due to lack of business, due to weather, those types of situations, we would typically charge an employer. But with that governor's order, what we've actually done is we have relieved all employers that are having to lay people off due to COVID-19. So that's in the process. You may still get a notice from us saying you're charged, but just know that we're working on that, we're fixing that, and employers would not have their tax rates impacted due to COVID-19, with the one exception being is because so many claimants are filing unemployment claim, it will impact our unemployment insurance trust fund. That's where the taxes go when somebody pays their quarterly tax. But we can take a big picture view of that, and so rates could go up just kind of across the board. We're not there yet. We're not saying that it is going to go up, but individually, the taxes would not be impacted because of having a worker file for unemployment.
Great. Another question here. Is the application for a self-employed person the same as it would be for a traditional employee who is filing for help?
It's the exact same process. So in the next couple of days, we're going to add some additional questions that all customers will see, but these new questions will really be geared towards those workers who are the self-employed individuals, but they would still file the claim the same way. What our system's able to do is it's able to just quickly say, okay, this person's eligible for regular benefits, or this is somebody that's not, and we need to kind of go through some additional steps. So they would file them the same way on the same website, labor.idaho.gov/claimant portal, regardless of whether they're a worker or they're self-employed.
Great. So we'll give folks a few more minutes to think about questions that they might have. And I'm going to try to put myself back into presenter mode here. There's just a couple slides and couple of resources that I would like to share with the group here before we wrap up for today. And I almost kicked somebody out of the webinar here. My apologies here. Usually I have an assistant with better eyes than mine to navigate these things. Okay, well, it's not going to let me show my screen here, but I'll just talk through what I'm going to say here. So the first thing another thing I wanted to remind everybody who's on the call that in addition to the SBA program and the Enhanced Unemployment Insurance Program that's coming out of the CARES Act, that there are some federal tax incentives that were built into the CARES Act that might be of use to you as businesses. I won't go into all of those. One of them we kind of touched on earlier regarding payroll taxes. So while payroll taxes are not an eligible expense under the Payroll Protection Program, for 2020, the federal government is deferring payroll taxes. So in 2020, employers are not required to pay payroll, what we quote unquote call payroll taxes, and this is federal. I don't know if the state is going to conform to this yet or not, but in terms of federal payroll taxes, those are deferred for this year and then have to be repaid back though over the next 2 years. So in tax year 2021, you would pay 50% of your 2020 obligation, and then in tax year 2022, you would pay the remaining 50% of your deferred payroll tax obligation. A second tax benefit employers should be aware of is that there is an employee retention tax credit that is also part of the CARES Act. So maybe you're a business who, for whatever reason, you're not able to utilize the SBA programs, but you're still keeping some employees on the payroll. There's some tax benefits there that you might be able to take care of. The feds have also loosened up a little bit on the carry forward, carry back on losses. So any sort of losses that you're experiencing this year, in the event that they wipe out your entire tax liability and you have negative tax liability, the feds are going to allow you to go back, file an amended return for as far back as up to 5 years, and apply that tax loss to previous years where you may have had to pay taxes. So just keep those couple tax credits in mind moving forward. The SBA programs, technically those are loan programs, and as a result, there may be some folks out there who have bankruptcies or other non-qualifying credit issues that would make them ineligible for those programs. We want to just let you know that there are other resources out there that you might be able to tap into to get help and get relief. Want to put a shameless plug in for the folks at the Idaho Business Development Center. These are actually a network of 6 development centers located across the state. So there's one near you. And this is a program that's funded by the U.S. Small Business Administration. And these centers are staffed with experts in business who are available to help provide counseling, support, one-on-one help, and possibly helping you identify possibly other funding sources to help get you through this current crisis that we're all experiencing. Alongside the Idaho Business Development Center, there's the Idaho Women's Business Center, and while they have women in their name, they help all small businesses that are out there. Over in Idaho Falls area, in the Boise area, and I think up in the Coeur d'Alene area, there are chapters of the Service Corps of Retired Executives, or SCORE, and those folks partner real closely with SBA to provide mentoring and one-on-one technical assistance to businesses that are looking for and seeking help. So with that, let me go back here to my trusty control panel to see if we have any other questions that I may have missed.
Hey, Jerry.
Yes.
Oh, this is Aaron with IOGA. I somehow
finagled
my way into unmuting myself. So hey, I had a couple questions, and these may and I think they're really directed for Josh. Josh, if you're still there. And thanks for the information. One of the questions that came up, and I'm not sure if there's sort of a standard answer to this, but do you have any insight into, for a guide, say laid off at the end of a previous season, September 2019, for the sake of example, who then maybe went down to Chile to guide, or in other words, by whatever means wasn't necessarily in the U.S. employed, and be able to draw from that quote unquote off season, November through May, June benefit period. Is there any capacity for that guide, or a guide in that situation to apply for unemployment benefits or unemployment based on their previous summer's work?
Yeah, that's a good question. So yeah, if that individual certainly could file and possibly use those wages. So what we'd look at, and I guess maybe to ask a follow-up question, would they be as an employee and they were earned wages, or is this somebody who is a self-employed individual?
As a rule, it would be an employee and earned wages.
Okay. So what we look at when someone files is we're typically looking at what we call the first 4 of the last 5 completed calendar quarters. So right now we're looking at wages earned between January and December of 2019. And so if somebody has wages during that time, they can certainly use those wages for the purposes of establishing a claim, and they very well might be able to establish a claim based upon those wages. We just simply do a calculation to determine what they're eligible for, and if they have enough in wages, then they certainly could be eligible for for benefits under a regular claim. If it turns out they don't have enough in wages and they're not eligible, then this is another person that would possibly be eligible for this pandemic unemployment assistance program. So I would really recommend that person at least file a claim if they're eligible based upon their regular wages. They may get a payment as soon as within about a week versus under this pandemic unemployment assistance program where we have to still do some of the work to get that going.
Mm-hmm. Follow-up question on that one. What about a guide, like say in this situation, same situation or similar situation, who's worked for 3 to 4 different companies over the course of a season, so say a June to September season, to make a quote unquote full-time season of those 4 months? Is there any differentiation there?
No, there's no different. There's the same answer as the previous one. We would use all of those wages from the 3 to 4 employers and maximize what that person is eligible for. So they very well might be eligible.
All right, great. Thank you. Those were a couple of the key unemployment ones. I might have a couple of follow-ups on some others, but I think those might be more PPP related. Jerry, were there any others in the chat for unemployment specific?
Yes, there were a couple that came in here during your questioning. So this person has filed a claim. So there seems to be, when people are going in and doing their claim online, it's defaulting to monetarily ineligible. Wondering if that's because the system has not yet been updated to reflect any eligibility. Any thoughts or insights on that, Josh?
Yeah, that's a good question. So typically what the system's saying there is that person doesn't have any wages working for an employer that we're able to see. It's based upon those employers' quarterly reports to us. And so it's saying that they're not monetarily eligible, but I would tell individuals to ignore that right now. We are in the process, I think, the next day or so, instead saying to them, instead of saying you're not monetarily, you're monetarily ineligible, you're actually monetarily pending. So we're doing a computer upgrade, and instead people start getting that message. But those individuals prior to that should still continue with the process, still do those weekly certifications. Their claim has been accepted by us, and we're working behind the scenes to update it with our new program.
And then there's also a second part of that question regarding weekly certifications. They're not quite sure what that would look like or how to update that into the system, or even if that's still a requirement if it's COVID related, if you might want to speak to that.
Sure. So what I've been talking a lot about has to do with that you're simply filing the claim. So once you file the claim, that gets the process going for us, but we need to know that you're still unemployed. And so we tell people every Sunday, they go back online to our system. There's a link, and I believe it says something like file certification application or file weekly certification. So each week that they're unemployed, they go in, do that certification for the prior week. We ask a series of questions. They answer those questions, and then that's what logs to us that that person's still unemployed and they're still meeting the eligibility criteria. And they would do that for any weeks into the future that they're still unemployed or they're not working due to this lack of work or this impacted as a result of COVID-19.
Great, thanks. We have and I am unmuted you, Christian. We have another question here regarding payroll protection program. Is there any way that folks could prepay their folks in May and June for work that they will be doing in July and August? And the concern there is to get those benefits delivered before that program sunsets on June 30th.
Basically you would make the loan now and you keep it in your account. You wouldn't pay it out till August or whenever you say you need it, because the payments are deferred for the first 6 months. So you don't pay anything. You don't pay the back loan at all at least for first 6 months. Sorry. So yeah, that's, you just basically manage your own cash flow.
Okay, so basically that June 30th deadline is not have to spend the money by that date. Just that's when the application has to be submitted.
Yep.
Is that correct? Great.
Yeah, that is the guidance I have so far. If it changes, I'll let you know. But that's what I have. That's what I see.
Great. And then folks have until September 30th to apply for the economic injury disaster loan.
Yes.
Jerry, can I ask a follow-up question to Christian on that last question?
Yeah.
Sure.
Hey, Christian, this is Aaron with IOGA. So
Hi, Aaron.
hey there. So to that question, would they still be extended within that or outside of that June 30 date range? Let's say they take the loan, it's however much, $100,000, and they prepay their employees for work that they'll do in July, August, September. Will they, if they expend those funds in July, August, or prepay before June 30, there's still that forgiveness, even if the actual work is done in July, August, September?
It's based off of your payroll, essentially. So when you do the work, or actually even the employees, you could lay off an employee and hire somebody back, and as long as the same amount is the same, if that makes sense. So you could fire Bob and hire Tim, but if you hire and paying the same amount of money, then and your payroll stay the same. That's what it's based off of. When you do the work and all this other type of stuff, that's not that is not described in the SOPs. Basically, you have to be a business that is operating before February 15th. In other words, you're not a new startup. You didn't start up in April. You've been established since before the February 15th, before COVID happened, and those are basically the guidelines we've got right now. Yeah.
So just to clarify even further, because I'm slow, if I hire Bob, if Bob worked for me in 2019, and he worked for me in July, August, and September of 2019, and really Bob is just a placeholder for a full-time employee equivalent, right? So Bob is part of my overall expense payroll sum that I'm wrapping into that, broken down by 12-month, 1 month average to establish the overall loan amount I get when I times by 250. So Bob's just one of my employees, and I hire Bob back on, let's say in June. So I get this loan, it's $100,000. It doesn't matter actually. So if I hire Bob back in June, and I say, all right, Bob, last year you ran these trips, and that amounted to, let's say, $10,000 in wages. And I'm going to pay you $10,000 with the expectation that you run these trips going forward in June. And that $10,000 I pay Bob, not going into whatever I'm paying Tim or Jerry or whoever else. Sorry, Jerry. But that $10,000 that I pay Bob is forgivable, even if I pay him in June in advance of the sort of set term, insofar as it correlates with what I'd paid Bob as placeholder for a full-time employee equivalent beforehand.
Yeah, that's correct. The only thing that I didn't bring up before that I do need to mention, because I don't know how you structure your employment things. Are they independent contractors? That's something I meant to bring up earlier and didn't. Or are they actual employees?
As a rule, actual employees, not independent contractors.
Okay. The reason why I ask is because you're not eligible. Independent contractors are not eligible or not covered under PPP. They would have to apply for themselves actually, but the business owner is not. And I meant to bring that up earlier, but I forgot. But yes, to answer your question, yes, that's all. That's eligible.
Okay, great. Jerry, I have more. I have probably some more for Christian, but if you have any more in the chat, we should take it away from me. I'll just keep on going if somebody lets me.
So I'm just looking through the chat here. Let me scroll down to the bottom. Somebody here just commented that many guides are 1099 and W-2 employees. Someone else earlier commented that when it comes to figuring out payroll costs, that the guidance that they had seen said that you could average from your previous year, that would work for some of that may work for some of the programs regarding, or some of the people who are applying for PPP through a bank. And I'm not seeing any additional questions here in the chat, Aaron. So with the few minutes that we have left, if you want to ask another question or two, go right, fire away.
Absolutely. So back to the full-time employee equivalent. From what I've read, it seems they're using an alternative definition to what seems to exist elsewhere. So say in the Affordable Care Act, to establish, or maybe it's the same as the Affordable Care Act, but separate from elsewhere, for full-time employee. Is there a differentiation between this definition using the CARES Act of full-time employee equivalent and previous definitions of full-time equivalency?
I don't know, because different agencies do use different calculations for full-time equivalency, and I haven't seen anything specific to PPP in the SOPs as of yet. I think it would be the same, whatever 40-hour work hour week would be, but I don't know. I might have to say,
in any case, it's the overall amount of payroll, and because that's how you're getting to your full-time, at least as a rule, and in other applications, that's how you're getting to your full-time equivalent employee equivalent, right?
So yeah, exactly. It's the full amount. It's not the individual. The individual person doesn't really matter. It's the total amount of the payroll.
Okay, yeah, that's the direction that seemed to be coming through otherwise. Let's see here. I had a couple more. So with the EIDL loan and this emergency coronavirus emergency economic injury disaster loan grant, the up to 10 grand, if an outfitter business applies for the EIDL loan, takes off the box saying I would like the $10,000 advance, please, and is approved for the full standard EIDL loan, they're not beholden to accept that full loan, right? Even if they receive the advance.
That is correct. Yeah. You don't have to. You can still get the advance and not get the decide. Hey, I don't need the EIDL loan. PPP worked fine, or I'm in a different situation. I don't need it. You don't have to accept the EIDL loan at any point. There's no fees. I did Google right before I came on here, and there's some fly-by-night place trying to charge people fees for EIDL loans. That's a scam. Don't do it. There's no fees. I'm trying to think of what else about the EIDL loan. Oh, that $10,000. So the $10,000, it will reduce the amount of forgivable eligibility on the PPP. So if you got the full amount of $10,000, and then you got a PPP loan later, that $10,000 would reduce the amount of the forgivable portion.
But not the overall actual award. Yeah. Yep. Let's see.
Hi, this is Jerry. I'm going to chime in here real quick.
Okay.
I have two quick questions before we wrap up, because we're at 3 o'clock right now. So question number one is that sole proprietors and contractors, are they eligible to apply for the payroll protection program? And if so, when is the start date for those applications?
They are eligible and they can apply now.
Okay, so they don't have to wait till Friday, April 10th?
That was guidance that was put out a week or so ago. I mean, let's just put it like this. I think if they reached out and started having conversations with their bank now, I think that's a smart idea.
Okay, great, because there was some confusion about that earlier with some other people I was talking to outside of this call. And